Today, I wish to consider the theory for a chapter of dissolution of a partnership firm. This is an introduction to the concept of dissolution of a partnership firm. Observe on the screen. In chapter 6, Partners' Retirement and Death, we knew that partnership ends with retirement death of a partner, but the firm is not dissolved. So by a retirement of a partner, new agreement is substituted to the old agreement. But the business continues. Business is not closed down. With the same name, title and interest, business is carried on by a newly formed partnership agreement. It has substituted the old partnership agreement wherein there was a retiring partner. Now, that is a dissolution of partnership, but not the firm. Then what is the meaning of dissolution of firm? In case of dissolution of firm, in this chapter we shall study the dissolution of partnership firm, wherein all business operation stops, discontinued, and firm ceases to exist. The name title of the firm comes to an end. Firm ceases to exist in its name and style. That is the meaning of dissolution of a firm. Let us consider this aspect in detail. Meaning of dissolution of partnership firm. The dissolution means discontinuation. The normal dictionary meaning of the word dissolution is discontinuation. Partnership Act 1932 lays down that dissolution can be of two types: dissolution of firm, dissolution of partnership. Let us consider these two aspects about dissolution. So there are two types of dissolution. Dissolution of firm, which we are going to consider in this chapter. Dissolution of partnership, that is change in profit sharing ratio, admission of a partner, retirement of a partner, death of a partner, or change in the terms and conditions of the partnership deed, all are known as reconstitution of the partnership firm. The other name thereof is dissolution of partnership. In case of dissolution of partnership, partnership agreement changes, but the business continues with the same name and style. Now let us understand in detail. Just observe on the screen. Dissolution of firm and dissolution of partnership. Dissolution of firm. Dissolution of firm means dissolution of partnership between all partners of the firm. First thing, the relationship as partners between all partners comes to an end. In this case, the business of the firm is closed down, its affairs are being bound up, the assets are realized, liabilities are paid off, books of accounts are closed, and the final settlement between the partners takes place. So these are the normal features of dissolution of a partnership firm. What happens? What are the aspects? The relationship of all partners as partners comes to an end. 1. Business is discontinued. Business is closed down. All assets are realized. All liabilities are settled. Partners' capital account, mutual rights of partners get settled. This is how dissolution of partnership firm takes place. When the entire business of the partnership firm is sold, either to a company or a new partnership firm, it is also treated as dissolution of a partnership firm. Now I want to discuss the next concept, dissolution of partnership. Up till now you have studied dissolution of partnership in last 3 chapters, right from reconstitution of a partnership, from admission of a partner and retirement of a partner. Let me just remind those concepts. Just observe on the screen. Dissolution of partnership refers to admission of a new partner in the existing firm, or retirement or death of an old partner of a firm, or even change in the profit sharing ratio amongst the partners, or any other change in the agreement. All the cases of partnership reconstruction are considered here, and where the firm continues its business operations on the basis of new agreement is the dissolution of a partnership, but not the dissolution of firm. This results into change in the existing relationship of partners, and firm continues its business. Firm continues its business under a new agreement. That is the basic ingredient of a dissolution of a partnership. Dissolution of partnership means new agreement subrogates the old agreements between the partners. Most important point that you should remember here is dissolution of partnership means this may or may not result in dissolution of a firm, but dissolution of a firm will always result in dissolution of partnership. Very important statement. Dissolution of partnership may be followed by dissolution of the firm, or may not be followed by dissolution of the firm. But when there is a dissolution of a firm, then dissolution of partnership is inevitable. That's an important statement that you should keep in mind. Next. Dissolution of partnership firm. The following important aspects about the dissolution of partnership firm that we are going to study in this chapter. So, the entire theory of this chapter will be discussed with what titles, under which style and concepts that has been mentioned. What are the various methods, modes and forms of dissolution of a partnership firm? Legal and other provisions with regard to the settlement of the accounts of the dissolved in case of dissolution, and normal process and the procedure for dissolution. These 3 points we are going to discuss in detail. Out of these 3 points, we are going to discuss point number 1 and point number 2 in this lecture, and this third point will be discussed in next lecture. Explained in next theory lecture. So this third aspect, what is the process, accounting process, procedure for the purpose of dissolving the partnership firm, that will be taken care of in my next lecture. Today I am going to discuss these 2 aspects here before you right now. Let me start. Methods, modes and forms for the dissolution of partnership firm. The dissolution of partnership firm takes place as per the circumstances mentioned below. 1. Simple dissolution. Dissolution without the intervention of court. Dissolution with as per the court's order. So these are the 2 ways the partnership firm gets dissolved. 1. With the intervention of court, or 2nd, without intervention of the court. Let me take care of first point. Simple dissolution or dissolution without the interference or the order of the court. There are various ways in which such dissolution is brought about. First, with reference to without interference of the court, simple dissolution can take place under the following conditions. 1. Unanimously. Now partnership comes into existence by mutual agreement, and therefore it can be dissolved by mutual consent of all the partners. This is a voluntary dissolution. So partnership relationship comes into existence by agreement. Same way, by agreement, the dissolution of partnership firm can be brought about. But remember, no majority rule prevails. Mutual consent of all the partners is necessary for this type of dissolution. That's an important point to be noticed. Under agreement, the dissolution of firm can take place on the basis of pre-decided conditions or agreement when the partnership was entered into. At that time, partners have agreed that following are the circumstances wherein we shall dissolve the partnership firm. And the moment those conditions, those circumstances emerge, the partnership firm gets dissolved. So that is under the agreement. So they have already entered into an agreement. Under what circumstances, when, where, how the partnership firm is going to be dissolved and such agreement exists, then partnership firm gets dissolved as per that agreement. Next. Under the Act. Under the Act, the compulsory dissolution of the firm takes place under the following circumstances. 1. By adjudication of all partners or by adjudication of all but one as insolvent. This is a very important person. The legal word is adjudication. Your textbook has used the word declared as a substitute of it, but the real sense of adjudication and the declaration is a bit different. So I have used the word adjudication. By adjudication of all partners as insolvent. So all the partners are unable to pay the liabilities. The partnership firm is automatically dissolved. Or when there is an adjudication of insolvency of all partners but one. Suppose that there are 4 partners, 3 are adjudicated, declared as insolvent. Then one partner is only left out. Now there cannot be a partnership with one single person. So partnership firm is dissolved. So here, by adjudication of all partners as insolvent or by adjudication of all but one partner as insolvent, the partnership firm is dissolved. Very important concept. Similarly, by death or insanity or mental imbalance of all partners, partnership firm is dissolved. Or by death or insanity or mental imbalance of all but one partner. All but one partner means suppose there are 5 partners. Out of that 4 are insane. Only one is sane. One is wise. In that situation, there cannot be a partnership with one person. So partnership firm gets dissolved. So by death or insanity or mental imbalance of all partners or all but one, the partnership firm is dissolved. And the next point, when the business of the firm becomes illegal or running of the business is legally not allowed, then the partnership firm is dissolved. Say for example, let me give you an illustration. In Gujarat, after independence, there was no prohibition for liquor. But the Gujarat government announced that the liquor production and sales is prohibited in Gujarat. Then all the partnership firms dealing in production and distribution of liquor became illegal. So those firms has to be dissolved. On occurrence of specific event, next. That is on completion of the object or the time period. As and when the firm is formed with a specific period of time or with specific object. On completion of the specified time or specific object, the firm automatically gets dissolved. So this is also one of the mode wherein simple dissolution takes place. Next. By notice. When the partnership is at will, voluntary partnership, the firm may be dissolved by any partner giving a notice in writing to all the partners of his intention to dissolve the firm. Suppose that partnership is at will and there are 4 partners A, B, C and D. D wants to dissolve the firm. So D has to give a notice in writing, not oral notice, notice in writing. To whom? To all the 3 partners A, B and C. Then the firm could be dissolved. So these are the various modes wherein simple dissolution takes place. Next. B point. Dissolution under the court's order of the court. When any partner makes an application to the court can pass an order for dissolution under the following circumstances. 1. When any partner becomes mentally unsound. Now one partner is insane. You can apply to the court for dissolution of the partnership firm. The firm can be dissolved. When any partner becomes incapable of discharging its duties towards the firm, there also the firm could be dissolved. When any partner acts against the interest of the firm or the business, the partner is not complying with the terms and conditions of the partnership firm. He acts against the interest of business, then also partnership firm could be dissolved. Suppose that A, B and C are the partners. A and B are the partners, are acting against the interest of the business and they are prejudicial to the interest of C. Then C can apply to the court of law and can have an order for dissolution of a partnership firm. Very important right given to a partner. When any partner frequently violates the conditions in the agreement of the partnership, so partnership terms and conditions has to be complied with honestly by all the partners. If any partner or partners by collusion commits default in complying with such condition, the aggrieved partner or the partner whose interest is being adversely affected can apply to the court of law for the purpose of dissolving the partnership firm and can have an order of the court for dissolution. Next. When any partner transfers the entire share in favor of a third person without the consent of the other partners. Now suppose that A, B, C and D are the partners. Now, just to penalize A, B and C, what D does? D transfers his entire interest in a partnership to a person who is not morally sound, who is a legal culprit, or who is being executed under Indian Penal Code. In such situation, and that too such interest is transferred to such culprit without the consent of all other partners, the other partners can apply to the court of law for not having relationship with such transferee, and they can have the order from the court for dissolution of a partnership firm. Next. When the firm makes continuous losses and the elimination of losses is not possible, there is no chance to continue the firm without losses, the partnership firm can be dissolved. Now, next, where on any other ground the court is satisfied that it is just and equitable that the partnership firm should be dissolved. So, partner can apply to the court for dissolution, or any person can apply to the court for dissolution of a partnership firm on any just and equitable ground. What do you mean by just and equitable ground? Suppose that partnership firm is run by alien enemies, by the persons who are from the enemy country to India, and any person can apply to the court that this firm is being run by the alien enemies, then on just and equitable ground, court can order the dissolution of a partnership firm. There is one decided case in UK wherein one of the partners was convicted because of travelling in tram without ticket. So it is an offence of moral turpitude, and the person who is guilty of such offence of moral turpitude, then any other partner can apply to the court of law for dissolution of the partnership firm. That is also considered to be one of the just and equitable ground for ordering a dissolution of a partnership firm by a court. So these are the various instances wherein partnership firm could be dissolved by the order of the court. Now I want to consider the next aspect. Where any partner is guilty of misconduct, that also I discussed before you. So any partner is guilty of or being convicted for any moral turpitude, then the partnership firm could be dissolved by the order of the court. Legal and other provisions regarding the settlement of the accounts at the time of dissolution. This is the next concept that I want to discuss. Now, for the purpose of explaining this concept, I have taken the verbatim from your textbook. But I will take efforts to explain the same thing by preparing a separate chart for that. Observe it. Occurrence of loss at the time of dissolution under the Indian Partnership Act. First, these losses be written off against the profits of the firm. In case of insufficient profit, the losses is to be written off against the capital of the partners. In case of insufficient capital, these losses will be borne by the partners in the profit and loss ratio, and the losses will be paid by the partners to the firm from their personal assets. Now see, when the partnership firm is dissolved, there are accumulated losses, and also losses emerge at the time of dissolution of a partnership firm. So there are two types of losses: accumulated losses and the losses emerge in course of dissolution. All these losses are to be first adjusted against profit. If the profits are not sufficient, then it has to be adjusted against capital. If the capital is also not sufficient to meet with those losses, then solvent partners are responsible to meet with the losses by contributing from their personal assets, because the liability of the partners is unlimited. The liability, now about the liability, this is the basic concept that has been explained. What is being explained? There are accumulated losses and there are another losses that occurs at the time of dissolution of the partnership. All those losses should be adjusted first against gains. Next, it is to be adjusted against the capital of the partners. And even after that the losses are unadjusted, then the solvent partners are required to contribute to meet with those losses. That's a basic principle. Now, what is the process for it? First of all, assets of the firm will be sold. From that, liabilities of the firm will be paid. If the funds realized from the assets are short, not sufficiently available to meet with the third party liabilities, then what to do? The personal assets of the partners are to be applied for the payment of personal liabilities of the partners, and whatever the surplus is there with the partner should be contributed to the firm to pay its outside liability. This is the process that I want to explain now. Just observe the screen. The partners have unlimited liability. Therefore, each partner is individually and partners are collectively responsible for the liabilities of the firm towards the third party. Now, partners are individually liable, collectively liable. The legal word for that, the partners are liable jointly and severally. So, partners' liability is joint and several towards the payment of liabilities of the firm towards the third party. That is the significance. But the real legal word is the partner's liability is joint and several. Legally, realization from all assets of the firm should be utilized for the payment of liabilities of the firm. So the realized value of the assets of the firm should be applied for the payment of liabilities of the firm first. The realization from the personal assets are used for the payment of personal liabilities of the partner same way. The personal assets of the partners will be applied for the payment of personal liability. Now here, there is a surplus. In case of partner, then the surplus of a partner can be applied for the deficit of the firm. But due to the unlimited liability of the partners, towards the firm, any surplus realization of the personal assets over the payment of personal liability can be utilized for the unpaid liabilities of the firm. Now, this is the process by which accounting is to be done. Next. And any surplus realization from the assets of the firm over the payment of liabilities to the extent of his share of the firm can be utilized in the payment of personal liabilities. Similarly, if there is a surplus in the firm and that is distributed in the partner, that surplus is available to a partner for the payment of his personal liability. This I am going to explain in detail by taking a chart subsequently. Loan to firm by a partner. This is a verbatim taken from your textbook. Not happy with the language, but let me explain you. The assets are realized. The partnership firm's assets are realized. From that, first of all, you have to pay dissolution expenses. Then you have to pay third party liability. Then you have to pay partner's loan. The partner's loan ran for payment after the making payment to the third party. Now when you are out to pay to the partners, the funds are not sufficient, then the debit balance of other partners should be recovered and we should try to pay the liability of partners, liability of the firm towards the partners, so partners' loan is to be paid. If there are more than one loan, then partners' loan is paid proportionately in case of capital deficit because of the insolvency of the partners. So at the time of dissolution of the firm, initially the liabilities of the firm will be paid from the realization of the assets of the firm. So firm's liabilities are paid from the realized value of the firm. Outside liabilities are paid. Subsequently, from the available surplus, the loan of the partner will be paid after paying creditors of the firm. And if more than one partner has loaned to the firm, and if the available surplus is not sufficient to pay them, moreover, if the partners are not in a position to make up the deficit, in such event, the loan of the partners will be paid proportionately. This is what I explained. Loan from partner's wife. Now, partner's wife has given a loan to a partnership firm. Now, that loan can be classified into two aspects. Whether that loan is given by a wife out of her stridhana. Now, Hindu law has defined what is stridhana. Stridhana means the amount of gift received by a female in Kanyadan at the occasion of marriage is identified as stridhan. That is a personal property and possession of a wife. And if the loan is given to a partnership firm from that funds, then that loan is known as loan from stridhan. And that loan from stridhan ranks pari passu as a third party loan. That's an important point. Any other loan other than from stridhan is considered to be a loan given by a partner to the firm. Just right. If the loan from the wife of any partner is given to the firm from the woman's personal wealth and possession, woman's personal wealth and possession is known as stridhan as per Hindu law. This will be paid like a payment to the third party. But the wife of any partner has given a loan from the estate of her husband, such loan will be treated as a loan of a partner to the firm. Liability of partners is unlimited. The liability of partners is unlimited. Thus, if any partner or the partners are declared insolvent, in such an event, the solvent partners are liable to pay the liabilities of the firm from their personal assets. Now, these are the legal aspects that we have discussed. Now, let me try to explain these things by just establishing the sequence by preparing the chart. Before that, look at the sequence in payment. Distribution of the realized value of the firm assets. The payment from the realization of the assets will be made in the following order. First, pay dissolution expenses. Then, liabilities toward the third parties. Then, partners' loan is to be paid. Finally, payment towards the partner's capital account in the current account are to be undertaken. And in case any surplus left thereafter will be distributed amongst partners in the profits and loss ratio. Now, this is the sequence in which the payment has to be made. Now, let me explain this concept by taking one flow chart so that you will understand it better. Dissolution of a partnership firm, order of payment. Here, all partners are solvent. In your textbook, the syllabus is relevant when all partners are solvent. The insolvency of a partner at the instance of dissolution of a partnership firm is not within the scope of your study, so I have not discussed that. You will learn those concepts in your further studies. Now, partnership firm. At the time of dissolution of a partnership firm realized the assets of the firm. All the assets of the firm are realized. All the assets of the firm are realized means either sold for cash or asset is taken by a partner at an agreed value or asset is given for payment of liability. These are the three modes wherein assets are realized. So, realized value of assets. First, it has to be applied to pay the dissolution expenses. So, from that, first of all, dissolution expenses are to be paid. After payment of dissolution expenses, when surplus is left, that surplus is to be applied for the payment of liabilities of the third party. Now, as I told to you before, a loan from a wife to any loan from the wife of any partner is given from Stridhana, that is woman's personal wealth and possession. This will be paid like a payment to the third party. So this type of loan is aggregated with the third party liability. So from this surplus, third party liabilities are paid. The loan from wife, loan of a partner's wife from Stridhana is also paid pari passu, proportionately with the third party liabilities. After making payment to third party, the surplus is left. Then the surplus is paid for loan from partners. Now loan from partners are paid even when the surplus is left. Then this surplus is applied for the payment of partners' capital account and current accounts of the partners. Now, when this capital account and current account of the partners, where profit or loss on realization of asset and settlement of liability is being transferred, then at this stage, the partnership on dissolution, the account gets settled. But if there is a separate loss and gain transferred to partners' capital account and then still surplus is there, then any surplus to the partners as agreed, means in the profit sharing ratio, it gets transferred. This is the sequence in which the payment is to be made. Now here the presumption is that all the time there was a surplus. But suppose that if any stage surplus is not left but deficit occurs, then what to do? Let us discuss it. Partnership firm. Realized value of assets first applied for dissolution expenses. Surplus is left. Then the surplus is applied for payment of third party liability. Now when you are out to pay to the third party liability, the result is not surplus but deficit. Then what to do? Means we don't have sufficient funds to pay the third party liability, or if we pay the third party, we are required to borrow, or we say that there is a bank overdraft. So there is a deficit. Deficit means funds are not sufficient to pay the third party liabilities. Or if you are out to pay the third parties from the available funds, there will be a negative cash balance. Then what to do? In that situation, see, all assets are realized. We are trying to pay the liabilities. Suppose that all the liabilities could be paid, but then negative cash balance occurs. The negative cash balance, presume for a while, it's a bank overdraft. Then what has happened? In the balance sheet of a partnership firm, all assets are realized, so there is no balance on the asset side. The cash balance is negative, so there is no cash balance also. Instead of, we have presumed that to be a bank overdraft, that will appear on the liability side. Now, what is left in the partnership firm balance sheet? In the partnership firm balance sheet at this stage, suppose that negative cash balance, say bank overdraft, appears on the liability side. Then partners loan to the firm appears on the liability side. Then partners capital normally has liability side. So all the items on the liability side, balance sheet would agree. So in such situation, there must be a debit balance of one or more partners in this situation. So if there is a debit balance, in case of one or more partners in such circumstances, it has to be there. There has to be a debit balance of any partner's capital account. Now that debit balance of the partner's capital account has to be recovered first. And we have presumed that all the partners are insolvent, so we can recover that debit balance. But how to recover the debit balance from a partner? Observe. Now the partner with a debit balance in a partnership firm. So partnership firm has a recoverable sum from that partner. We talk about such partner and we presume that that partner is solvent. So from the realizable value of the personal assets of the partner, they are first applied for the personal liabilities of the partner. And after that, if surplus is left, because surplus has to be there because the partners are solvent, that surplus is applied to clear the capital account debit balance. In such situation, one or more partner must have a debit balance of capital account, and that capital balance shows that the amount is recoverable from the partner, and the partner has to pay that recoverable amount from the surplus of his personal assets. So that debit balance is recovered, and when the debit balance is recovered, what happens? This deficit is converted into surplus. Now that surplus is applied for payment of partner's loan, and still there should be surplus that is applied to pay the credit balances of one or more partners, as the case may be. So that will be applied to the partner's capital account and current accounts. So partners with credit balance in capital account will be paid at last. This is how the settlement is made. Now what happens if this partner is insolvent? Those issues are not in your syllabus, so I don't discuss. Suppose that this partner is insolvent and there is, instead of surplus, there is a deficit, and here also there is a deficit. How to account for it? How the mutual settlement takes place amongst the partners? That is not within the scope of your study, so I just keep myself away from the discussion of those aspects. I just conclude my discussion at this stage. I have tried to explain the concept of dissolution. What are the various modes by which the dissolution takes place? What are the legal provisions about dissolution implementation? How this should be done practically while writing the books of accounts, that will be discussed in next lecture. I think that you have followed all these things. Thanks to all of you.